Hello to all. Welcome to this session where we will discuss about the Mirae Asset Healthcare Fund. As per the mandate of the fund, it invests in the Indian healthcare space with around 80% of the investments which are made into the healthcare and allied sectors. If we look into the fund current positioning, around 85 to 90% of the fund's AUM is invested into the healthcare space, whereas the remaining around 10 to 15% of the fund AUM invested in the allied sectors like chemical, insurance, etc. With the concerns over COVID and improvement in fundamentals, the healthcare index has outperformed the Nifty by 4 percentage points over the last 2 to 3 years. If I look into the longer horizon, say last 10 years, still it has outperformed the Nifty by around 2.5 percentage points. This is even after a period of 4 years where there was a substantial underperformance in the index. Now let me divide our thoughts in 3 buckets. First, let us try to understand the opportunity size along with the various subsegments within that. Then I will briefly talk about our investment philosophy, followed by our outlook on the sector. Healthcare is a vast industry with almost around USD 10 trillion in size globally, which is 10% of the global GDP. However, if we look at India, we spend less than global average at 2 to 2.5% of our GDP. Hence, we believe the opportunity is huge, especially with the initiatives by the government over the last few years to keep healthcare at the forefront. Starting with the Jan Aushadhi Ayushman Bharat scheme and very recently with the PM Atmanirbhar Swat Bharat Yojana, where it intends to spend around 64,200 crores over the period of next 6 years to develop healthcare infrastructure across India. Further, as the world is still grappling with the effects of the pandemic, the government is incentivizing the industry to set up manufacturing infrastructure in India so as to further strengthen its global leadership in manufacturing low-cost medicines and further gain scale. All these trends will benefit the sector across the value chain. Now, if I talk to you about the various segments within the healthcare space, starting with pharmaceuticals, where we believe the worst is behind, especially in terms of the US pricing, which is now at a more normalized level of mid-single digit versus a double-digit erosion we saw in the period 2014 till 18. Further, with many companies investing in complex and specialty products over the last few years and are now starting to see monetization of these investments, which would help them improve their returns from the US market over the mid to long term. Furthermore, the domestic market business has been steady cash generator for the industry and continues to remain lucrative with the sustained low double-digit growth. The industry is also expected to benefit from the China Plus One strategy globally, especially in the API segment. On the services side, consisting of the hospital and diagnostics, again, India has a very favorable positioning considering the huge underpenetration of these services within India. Talking about hospitals, we only have 0.5 beds per 1,000 people versus 3 beds per 1,000 people globally, thus offering huge room to grow for the hospital sector. Similarly, in diagnostics, the organized industry is just 15% of the total market of around 40,000 crores. Thus, there is immense opportunity for the unorganized to organized shift. Now, let me move towards our investment philosophy. We follow a bottom-up approach in investment and with focus on growth and quality of management while keeping cognizance of the benchmark weights. All the basic tenets of investments ranging from the superior ROE, long-term growth potential, good management are some of the basic filters which we use for all our investment decisions. Now let me shift focus to the valuations. We believe the healthcare sector with its substantial growth opportunity is well placed, and now with the government initiatives will give further fillip to the healthcare sector in India. We believe the sector would be able to sustain a double-digit earning growth in the mid to long term. The aggregate valuation for the sector is trading at par with its long-term mean of around 20 to 22x forward earnings. Having said that, with the improvement in outlook and ROE, which is expected to move from a low double digit to its historical levels of 20% plus, should further aid re-rating of the sector. Thus, we believe the healthcare sector, being a secular growth sector, should be part of the core portfolio of the investor. Thank you for tuning in. See you next time.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.